This is Optimal Finance Daily, episode 2292. What you need to know about infinite banking, an alternative investment concept, by Kalen Bruce of MoneyMiniBlog.com. And I'm your host and personal finance enthusiast, Diana Merriam. This is another Monday Mastery episode here on Optimal Finance Daily, where each Monday we take a look at an article that features a more complex personal finance topic. So with that, put on your thinking cap as we get into this next article and start optimizing your life. What you need to know about infinite banking, an alternative investment concept, by Kalen Bruce of MoneyMiniBlog.com. Although infinite banking has been around for decades now, there are still many individuals and investors who know very little about this strategy. And while many are aware this system is based around high cash value life insurance, they still have very little understanding of just how infinite banking, or cash value life insurance, works and how it can be applied to many of those looking for safer ways to plan and save for retirement. This article will answer some of the more common questions about infinite banking, so you can have a clearer picture of just what this concept is, how it works, and whether or not it's something you should consider researching further. What is infinite banking? The infinite banking concept, first developed by R. Nelson Nash in his book Becoming Your Own Banker, is based around a specifically structured cash value life insurance policy that's created to favor cash value growth over base life insurance. The concept utilizes the liquidity inside of a high cash value life insurance policy in order to grow and protect capital, while also having access to capital and liquidity for personal, business, or investment use. The strategy often relies on using these life insurance policies as your own personal bank. By borrowing money and paying yourself back with interest, you're able to grow wealth with compound interest indefinitely, a key component to growing a sizable retirement nest egg. How does high cash value life insurance work? The main component of infinite banking, high cash value life insurance, uses a whole life insurance policy that's been structured for cash value growth. By structuring it in this specific way, we maximize the growth potential inside of the whole life insurance policy. Is it true that infinite banking can grow my money tax-free? Tax-free growth is a huge benefit for any retirement plan or savings vehicle. Because life insurance policies earn dividends, the dividends remain tax-free as long as the life insurance policy is in force or active. By keeping the life insurance policy open until we die, we avoid any taxes while we're alive. Then, when we die, that money is passed on to our beneficiaries or heirs, income tax-free. This way, a high cash value life insurance policy can remain tax-free indefinitely. This makes the growth inside of these policies more valuable in comparison to other safe investment strategies because the growth inside of the policy is tax advantaged. Taxes can have a major impact on growth. Infinite banking utilizes the tax advantages inside of a high cash value whole life insurance policy in order to provide more income and capital to the policy owner for personal use or retirement. What kind of growth can I expect? Historically, the growth inside of these policies has been around 4 to 6% or more tax-free. These are conservative projections. Infinite banking relies heavily on the individual saving more money and keeping that money safe without market losses. By avoiding stock market and mutual fund losses, we can, in essence, earn more on our money than we would by risking that money in the market and constantly trying to earn our losses back. Compound interest over time is the most effective way to grow wealth. Infinite banking utilizes no-loss compound interest in order to effectively grow and secure wealth for the long term. Losses can also have a major impact on compound interest. Infinite banking avoids these losses by using high cash value life insurance, an investment with guaranteed minimum returns when structured properly. Can you roll over an IRA or 401k into life insurance? Because a 401k or an IRA are tax deferred, we can't roll them into a life insurance policy. In order for money from a 401k or IRA to be put into a whole life insurance investment, it must be taxed. In some cases, taking money out of a 401k or IRA will also come with a penalty depending on your age. It's always best to take this into account before making any liquidation decisions inside of a tax-deferred or government-sponsored savings or investment program. How do I implement infinite banking? Implementing the infinite banking concept is not difficult. However, it does take some precision. An expert will be needed to set up the life insurance policy so that it can be maximized for cash value and not for insurance. The majority of those who sell life insurance are life insurance professionals. However, many of those who help implement the infinite banking concept are investment and financial professionals with a financial background, not a background in simple life insurance planning. It's best to speak with a professional before making any long-term commitments to an infinite banking plan. These plans are created with the long-term in mind and must remain long-term for them to work properly for retirement. Is infinite banking right for me? There's no financial product or instrument that will work for every individual. For those who earn a significant amount of return in their stock or mutual fund portfolios, safer investment strategies are probably not a good fit for their risk-based investment plans. However, those who have had bad experiences with Wall Street investment methods and are looking for safer alternatives to risk-based investment models may find infinite banking is a good fit for their goals and future savings and investment decisions. Infinite banking requires discipline and commitment to work properly for the long term. It has its advantages and disadvantages. Infinite banking practitioners see things differently. Many people believe that it doesn't take risks to create a solid financial future. Always speak to a professional before making any major decisions or changes to your financial plan. You just listened to the post titled, What You Need to Know About Infinite Banking, an Alternative Investment Concept by Kalen Bruce of MoneyMiniBlog.com. If you've recently bought anything, you've noticed that prices have gone up on almost everything. But thanks to our new sponsor, GoodRx, you can save on something particularly important, your prescription medications. GoodRx is the fast and free way to save up to 80% on the price of your prescriptions. All you need to do is search for your medication on the GoodRx website or app and show your discount at the pharmacy counter. It's that easy. Not to mention GoodRx is accepted at all major pharmacies. And even if you have health insurance, GoodRx may still beat your copay price. You know how much frugality means to me, how many ways I try to save, but never before have I seen a way to save on prescriptions. I really love GoodRx. It's extremely easy even for older friends or family that I've recommended it to. So for simple, smart savings on your prescriptions, check out GoodRx. Go to goodrx.com/OFD. That's goodrx.com/OFD. goodrx.com/OFD. There was a period of time that I found myself intensely interested in the concept of being your own banker. I distinctly remember borrowing the book Bank on Yourself by Pamela Yellen from the library to learn more about it. Two things made me stop reading. First of all, the book was very misleading about the risk of investing in the stock market. There was a lot of fear-mongering about the risks without any qualifiers. It had some stats around people losing all of their money through stock market investing, which is certainly possible if you invest in a single stock and then pull out your money at the first sign of a market correction. But long-term index fund investors don't need to worry about this. I remember the moment I closed the book. I think it was on page 70. There was a chart that showed that it would take 40 years to double your investment with a whole life policy. No, thank you. I can do that in 10 years or less by investing in the stock market. Do I understand everything about whole life insurance and infinite banking? Absolutely not. The policies are overly complex insurance products that are extremely hard to understand, and this is by design. But I know enough to not buy into it. Most real estate investors know not to invest in timeshares. Despite what the salesperson says, it's not an investment and it's a bad deal. Whole life insurance and infinite banking is like the timeshare of the stock market. Smart investors like you and me know to steer clear. And with that, we close the books on another episode of Optimal Finance Daily. Thanks for being here today and every day and making another episode possible. And be sure to come back tomorrow for more, where your optimal life awaits.